I talked about this morning as to where I felt you were wrong and where I felt things could start to change in the bund. And this is really important because if you understand the nature of what's going on and why a certain point is important, you can then start to deduce how the move's then going to happen. What's going to happen within that move. That way, it enables you to trade that move better because you can expect a certain type of price action. You can expect a move that goes in a certain way. So, what were we looking at? Well, this was the move up from Friday. We get a gap, continuation. Consolidate all of Friday. And what we had is pullback to a level, this is 54s. Go again, new high, pullback, 54s, and we dip down as far as 52. So it's this 54 to 52 area that's key. It would be fair to deduce then, on the back of Friday's move, and looking at the shape of the profile, that a fair few shorts have been driven out of the market, creating this P-shaped move up. Also, longs will have accumulated or started building up above 54, 52 area. It's also the bottom of value. So, with an open inside value, if we start shifting out towards the low or towards the bottom of value and start coming out, people are going to start getting out of this market. They're going to start thinking, I'm not so happy about my longs up here because we've had, well, there was the first high. If you got long, you got the other. We've then had another fail, and what have you now got? Head and shoulders. So you've got a head and shoulders pattern, you've got a break of value, you're going to have people who are positioned long get out of this. That helps you understand how the market's going to move. So people are rushing for the exits, they don't hang around. There's less two-way trade on this, particularly once it starts going, which then means you're going to struggle to get in. So you've got to be a bit more aggressive. You've got to be a little bit more willing to go and hit market for it, because if you don't, you get left behind. I'll show you this now. And what we're looking out for is the way that prices get taken out. Market trades down and it just drops straight through prices. So we're down at the bottom of value at the moment, down at 51s. Not too much trading just at the minute. You see, so it's still reasonable, comfortable. Traded 200 into the bid, goes offered, trades back up, nothing really going on. Now we're starting to get into an area where there could be a little bit of worry. We just traded 800 there and straight away offered 500. Trades back through. So we're not yet kicked off the move. This is the last chance. As long as we're staying below these 52s, which is the bottom of value, trade 53s, straight back off at 52, 51. Very quick to get on the offer here. So anyone who's thought, last chance, it's a false break and we're going to run back up, they're now looking a little bit wrong on this. So what you're looking for now is, as we start trading down, start trading 48s, this is going to get hit and hit and hit. And what you're looking for is the longs are now going to go, okay, we'll sell it to the bid. And so you'll see them take the bid out for whatever's there. So you see a reasonable amount trade through. You see now it's not letting it up back above 50. Reasonable amount trade through, and we'll go offered. There you go. Trades through again. Offered. Trades back up. 48 goes offered. They trade 300 into the next price. The offers are stacking up as well now. People are starting to chase this. And there we go. 400 trades through goes offered. Do you get any bid back up? No. 400 trades again. This is where if you're starting chasing now, you're not getting in. This is because all of the longs are now going, right, I need to get out. Now you start seeing the size coming back in as well. So it's chasing 400s, 500s. Every time it takes the bid out, it's a decent size on the offer. And this is quite typical of this type of move. But it's realisation that that's what's going to come. You know that it's going to be the longs getting out of this. They're not going to sit there and try and carefully get themselves into a short or carefully sell it, they need out and they're going to sell it. And then every time it bounces, they use that as an opportunity to sell again, to get out of position again. And then the move continues. You get 36 offered, trades back up, 800 trades through, 900 trades through, trades 37s. You've now got a bit of high volume as well, low volume the other side. So you've now got more place that's offering you a little bit of resistance on this move. Stall for a moment, then trade begins once more. And size keeps on following it down. Very, very heavy offer here. You don't get any bid back, and any bid back that does come, very quick. Straight back in, 200, 300 on the offer, and then starts and takes it down to a new low. So if you are trying to get in on a little dip, a little flick back up, you've got to be quite aggressive on that. You sort of 2-3 ticks up, you've got to sell it. But this is my point, and this is the point I really wanted to make, that because of the way the market's set up, this type of move can be expected, and if you understand this price action or you recognise it, you can be a little bit more aggressive because you know what the structure's telling you. And this also on the back of that Merkel news, just to help things along a little bit more. But if the structure's saying to you that people are going to start coming out of the market, then you've got reason to go for it. You've got reason to keep on trying to sell it into those lows. Gets you back down to those previous, or yesterday's open, previous high gap, which comes in at around about 24. Then the move starts to slow up a bit. You get a little bit more two-way trade. Another little snap down. And now it's getting sort of very quick in the sell. There's a little bit of more urgency on this, a little bit more panic, and then it starts to rotate a bit easier as well. And this is where you perhaps start thinking about getting out of this. You've achieved the drop down to the gap. We've dropped down as far as 19s, which is the sort of highs before the little spike up. That's perhaps a place to be thinking about getting out. We've just seen a very, very quick 25 tick drop. Target on the head and shoulders would have been 35. So in the end, you do actually manage to achieve the full head and shoulders move, because we get down towards that close VPOC, one little touch through, excuse me, reverse, and then we consolidate the day out. And that's quite a typical shaped day after people have been rushed out of long positions. You get that B-shaped day, market balances at the low, and that's that.